So you're focused. That's a good thing. All right. Good morning, everyone. All right. So yesterday was the monster rally day. What do they say? The biggest one-day gain in history. Wow, wow, wow. And what does that actually mean? I guess it's the most important thing. What's the takeaway from that? Well, obviously, it's a powerful bar. We're looking at the NASDAQ futures here. But let's just go to the spiders first. Yeah. When I look at that big green bar, but then the context of what preceded it and the trend down, and as prices start to accelerate, I put that in the normal camp, meaning if this had happened, say, retesting this low down here, and this bar formed over here where it had pushed up into that area, I would have been impressed to see that kind of a move with a pattern that preceded it that looked like that. Whereas this, it's like, okay, that's, big, it's impressive, but it did nothing to change this downward move. And the way it moved down, it did nothing to suggest that there's going to be a break in this trend for now. And where prices are at right now, the pullback, that's fine, normal. We talked about that at the end of the day that, typically, good morning, typically after a day like this, a big wide range bar, you get a narrow range bar. Most of the time, it stays, if it's really bullish, it stays in the upper third. And we get a continuation type pattern where it would go up tomorrow. If today turns out to be a consolidation day. So looking at where things are right now, and you can see this is where they're trading. I don't know if that was a bad tick that occurred right there or whether it was really rejected. There was some kind of a move. I wasn't watching it at the time, but if there was some kind of a move that rejected from those levels, that's to be, it's not a bad tick, Alex says. Okay, so there must have been some news and prices rejected it at that time, which means sellers are up there just saying, let me out. Thank you very much for yesterday. I held this thing overnight hoping for a gap up to dump this, and it's opening lower, and that may evolve into a price down. So this is where, after an impressive rally, right, it doesn't matter whether we're talking about yesterday or at any point in time, when you have a wide range bar like this and it runs up like it did and pretty much started to accelerate later in the day after a little rest, which was bullish, but it's used up all of its bullets, so to speak. What I mean by that is it came down hard and it created this void here. And when it did not roll back over to form like a W bottom, it consolidated here at this resistance. Buyer said, go for it. And it came all the way up what I called, its destination. Meaning as prices begin to make a turn, you look at where it might go to, where its destination is. Meaning it could go to here, and we'll see what the reaction is. The reaction was bullish, and then it could go to here. Now, how big is the resistance at one location versus another location? So as you can see, this consolidation here is larger than this one here. So common sense suggests that it's going to have a more difficult time. So today may be just a choppy consolidation day that would consolidate in the upper half, ideally, of this bar, and then we'd see if it can follow through. So now we've got a pattern. Right? If we were like, we don't have to flip it over, but just to imagine or think about this created a void, right? This area here, a little consolidation, and then it went up to the next point, and now it's closed it. So it's reached its ultimate reference point for now. So now the way it moved up, it's created the void below. So where do any of us want to buy at this point? Well, we can come up with some subjective reference points and say, hey, if it fell back 50%, if you're a Fibonacci, whatever, you might be measuring from here to here and you're doing your 0.618 retracement with your Takumi cloud with a, whatever hanging out there with your anticipation of that. But is there any price levels where we would want to buy? And probably better reference point, we go to the futures, which we'll do. We'll go to the S&Ps here. And yeah, you can start a new line and we'll draw another line on top of another line, George. And right, I got to remember that, Pat. That's why I was looking for you yesterday in MT Live. And it's like, Pat told me how to pronounce this ridiculous name. But here we got the S&P futures and a pop up. I guess that's what happened is it popped up to a new high. It came back in. So the breakout failure. Finally broke. We'll take a look at that, Cliff Loco. Well, maybe it's something that looks good. Things that look good in the bear market tend to underperform, but we'll take a look at it. In any event, so when we look at this, we say, well, where is this likely to stop? So yesterday afternoon is where it had this little rest, and then it ran into the close. And this is the subjective reference point, meaning it's beyond what's directly to the left. It's been neutralized, right? Neutralized where it's gone down and it's come back up. So it's been tested, as prices have gone away from it and back up through it. But that'll be the reference point where it's at right now. And if we bring this down to say a 5-minute to get a little bit more detail, there's not much of anything here. So in reality, what has to happen? What we look for to happen here is, okay, we'll say this is pretty much the area where we would want to see the S&Ps hold. And they're trying to do that right now. So here you can see that sell-off that occurred after the breakout failure, and it started to pivot. And now we start looking for clues. Can it create an area of support? And we see that's what it was beginning to do here. But when it popped up from here, sellers took advantage again. So based on that, we have a clear picture that sellers are in control here this morning. And prices are coming back down to that level. And this may whip back and forth. This is a picture of uncertainty right now. And that is what happens on a day after a big day. Can it keep going up? Do traders or investors want to keep buying after prices have made such a run? In a downtrend like that, most don't. But if it can survive today without collapsing back down to the low of this bar, which is possible, if it can't hold this area, that's what it's going to do. If it cannot hold and build support in this area and just at least go sideways and chop around here, it'll go all the way back down. And that is going to open up the door to where we know it can move further. And don't pay attention to the weekly bar right now because we're not, we got today to go and tomorrow to go. So we don't know whether this is going to hold here. I guess that 200 MA on the weekly chart came into a focal point there, but we do have a little reference point of support in this area down here. So we'll see if this can begin to build and stabilize and begin to form at least a retest type of pattern. Right? Those of you that got the video last night, we went back in time and you saw the retest patterns. It's a common pattern that historically, as prices come down like that, they come back up a little bit and then they go back down. And it takes weeks. and they come down and they test here, and then you start finding stocks with relative strength, and that's where you get the great buying opportunity for a bigger move. Historically, this move, if you're quick, you can take advantage of it, but this is not the one that will make you a lot of money. It's the one where it comes back down and retests, and then you get a second bar like this or a bottoming tail bar. Historically, that's the setup that will do very well for us. So let's look at the other markets and Qs. Pretty much, shot all its bullets too. Go back to the 60 and, right up into this thicker area of resistance. And now it's the same story. Can it begin to hold here and build up this area of support? So we'll wait and see what happens. We'll assess what stocks did well yesterday when the market, after 9:30 to see how they hold up here. So we'll take an overview of a lot of things on how they did. So, Amazon had a nice day. It's still in a downtrend. It's a broken stock. And right now we can see it's down, 33 points, almost 30, was it 32 points? So not a big deal considering how much it went up. But this is, we start looking at individual stocks. That is pretty much what we're seeing. What's happened in the market right now, that looks like what's happening in some of these stocks that had big days. Apple, right? Same kind of gyration there. Sellers took advantage. It's in a downtrend, and we'll see if it can stabilize down here. That's going to take some time. Old GE had a decent day yesterday. We'll see if this is possibly what's going to be the low in it. Well, we shall see. AMD. Right, so there's nothing here that's like, wow, this looks fantastic. Facebook had a decent day. It's down a bit. Baba, like similar patterns. Everything is down here. Netflix is down 5 and change, but not collapsing through the halfway point of the big green bar. So that's kind of your just line in the sand of objectively saying, historically big green bars, prices correct a bit after that, but they stay in the upper half and ideally in the upper third. It's real simple. It works. NVIDIA, that didn't have such an impressive day. That could be a good one to be thinking about shorts when the market gets weak again. Roku, this one got a big upgrade yesterday. Saying somebody come out and said that this was going to be a huge winner, I think, in 2019 yesterday. And just looking at some others. Gold was down yesterday. That took a breather. We'll take a look at gold. Twitter, which was looking like, boy, this thing could get going over here, just fell apart when the market did. We'll have to see. It'll take a long time to rebuild that. So there's nothing here that is all that impressive. Square had a decent day. That's down a bit. It's Loco. Pretty sloppy, choppy move to the downside. Maybe it could start to rebuild here. Let's take a look at the weekly chart. So it's cleared some resistance. It had a big pop here. We could put that on a watch list to see what it does right here. But here's the same idea of a big impressive move and a price void. We could say this was a victim of the market, meaning why didn't it hold? Why couldn't it hold right up here, which is what it should have done? Right? It should have held. And in reality, this little pullback right there where it began to build, and notice the bottoming tail bar. These kind of patterns that come down and retest in that bottoming tail bar, and notice it's followed by another one, that's where they take off from. So maybe this was just a victim of the market. Let's just see if it can get back up here and how it holds up over the next day or so. It's something that's done better than most, so I'll just set an alert and see what it can do. It's not something that I'm interested in the moment. And bottoming patterns are treacherous. They really are. And we'll see. Anyway, let's get back to this. The Dow down 350 something points. Same story. Little breakout failure caused, oh my God, it's not going to the moon. Get out of the way. So far, it can't bounce. You got another reaction here where it tried to go up. So we'll see what this does in the first 5 to 30 minutes in the morning to see if it can hold on. And bonds are up a little bit more, which means, well, interest rates going to be down from what they were yesterday. And that is not good, as those yield curves will continue to narrow. Oil stabilize, still in a downtrend, and trend is down until proven otherwise. Weekly chart, it's on some significant support, and just like the markets, when something comes down hard, it creates a void. It needs to rebuild, and how that rebuild looks can take on many different pictures. Whereas, well, this went sideways for months, but generally speaking, it comes down and it forms a swing low or a pivot. That pivot gets retested, and sometimes it gets retested multiple times. And just depending on what you're trading and what's happening in the environment at the time, sometimes it gets multiple retests. And then finally, for whatever reason, things got going here and it had a rally. But this is what you want to be looking for. It pivots, it retests, and it starts to build some support where there isn't any. And that's what we were looking at. And when I said this morning, going back over here, all right, this starts to try and build here. Will it be successful or not? So we just wait. We're going to wait and see if it can hold or whether it's going to start to drop here. And we'll be watching different stocks to see how they hold up and try to move up or not. And, some of the leaders, Apple, Facebook, and such, that did well. And also weekly chart gold continues to march up toward that resistance area. And it looks like it's going to be able to get there the way it's looking here. It survived yesterday's topping tail. No one was interested in gold yesterday with stocks rallying. It formed a topping tail, and so far that's being ignored. That's bullish. Right? It's gotten above its 200. It's got this bottoming action here. You want another 1,000 point day, George? Wow. Well, put in your order. See what the market gods have in store for you. If they don't hold here, what's going to happen. All right. So look, hoping for is good, meaning, is this in the realm of possibilities? Maybe. I think unlikely. Historically, we get a day like this, all right, that holds that halfway mark. Hopefully it doesn't go back down to the low, because that certainly could wind up in seeing a pretty sharp move to the downside if this gives back all of its gains. Is it officially a bear market and play accordingly? I believe so, Tony. Again, I don't know if you watched the video from Monday, but I showed you the trend matrix with all of those sectors and broader market indices in the monthly, weekly, and daily, all in downtrends, and room to go down. Whether you call it 20% to make it official, who cares? The trend is down in all of those time frames. So that equals short the rallies and see what happens. All right. So I think we pretty much looked at what I want to look at. Dan is out until this afternoon. Just looking what else here might be moving a little bit until it changes, and we'll know when it changes. And it's gonna take time. All right, so be patient. All right, this takes time. It's got to flatten out. You know, it's got to retest. It's got to get away from the hysteria over here and the big drop. You have all day. That's not patient. I'm saying this is going to take weeks, if not months. Well, it's an upside shakeout, and it's had a decent reversal day. It's at some support. So I don't know what to do with that, Alex. I mean, it had a nice day like everything else did, but, after falling like that, I would think, unless it can have some miracle move back up into this resistance here, it's going to roll over and go lower. And so I look at the weekly, and again, if it can hold here, and the same story, if this can go sideways and chop around and hold up, that would be worth considering. So the more I can't make sense out of something, the further out I start going, looking at longer time frames to try and make sense out of it. Well, again, relative strength is one concept, but remember, all right, so let's put it this way. Let me do a Gibby quiz with you, or Q&A. Would you agree that this market has not completed its corrective mode yet? Okay, yes. So the stocks that show relative strength when the market starts a bearish move like this, historically will eventually succumb to the bear market. And when the ones that have shown strength finally give it up, like years ago, it was Cisco and some others that were like, just, you cannot take them down. And maybe that was in the 2000, 2001 bear market. And as the strongest ones finally gave it up, we got closer to the low. It was like the devastation had to happen everywhere, whether it was back in the day, whether it was eBay or whatever it was, everything had to die. And I don't know if, we're in that kind of a situation, but the monthly charts do look pretty ominous. So we'll see. And point being, don't be impressed so much by relative strength at this point in time. FedEx, look at that monthly bar. My gosh, that has to be respected. All right, you got some stabilization going here. I mean, let's see how things shape up here today. Eric says, why did you say bottoming patterns are treacherous? They're treacherous, Eric, because they often have multiple retests. So impressive moves off of a low that lead you to believe that something more to the upside is coming typically fail. It's not a stock that's in an uptrend where you have an alignment of biases that are saying, hey, I want to buy this on a pullback. In a sideways bottoming pattern, you've got a lot of people that want to get their money back. And those impressive rallies are a godsend to them to be able to sell into. And that's why they fall all the way back down into the base. All right, guys, market's going to open here. Let me get situated myself with a different platform, and let's get going. All righty. Okay, you guys on YouTube, I hope you enjoyed that. Give us a thumbs up, share the channel, hit the bell so you get alerts, and we'll be back tomorrow. Have a great trading day.